going on, guys? How you all doing? Kanal here, Bulls on Wall Street. Guys, want to talk to you guys a little bit about, how do you trade news like once it comes out like mid-morning? So, we had an awesome trade on NCLH yesterday, and it was it was a simple trade, but, this is something you got to always be aware of. And it's kind of cool now, like on TC2000, they've got a whole pre-market section where like all the stocks that are moving around in the pre-market will start showing up on your scans. And so what you can start to do is there's like a multi-time frame scan. So I run a couple things like we're always searching for gap down stocks, like stocks that have news out. But what I also do is like you can run now on any easy scan, you can run a multi-time frame scan. So like you can run like a time frame for stocks that are like popping down, on the daily. And then what I like to do is add like a second time frame so that I can find stocks that have just moved like in the last like 15 minutes. So if there's a stock that has like a pop in the pre-market that just comes out of nowhere, then what will happen is, that'll also show up on the scan. So if you see here, like NCLH announced yesterday that they're right around, it was like sitting at 9 a.m., 1550, and it announced that they're like basically, they have concerns that they're going to be able to go bankrupt and so on and so forth. So it ends up being like, like a big swoosh down, and, like you man, popped down like $3 down there. So, this type of stock catches on my radar. Now, I didn't catch that first flush. I saw it, but I was teaching class in the morning, and I was a little bit late to the reaction, and that's okay. Once I see that kind of shred down, and you'll be able to see like on TC2000 you always have like kind of the different news up and stuff. So I'll be able to kind of get the basics of like what's happening. And I'm not a big news guy in general in terms of like reading them and trying to understand the dynamics of it, but knowing that there's some news. If you got a bad headline, you get a gap down, and you've got a stock that already is in like a big downtrend, that's usually the perfect storm for like setting up a short. So, once this thing starts to move, it's just a matter of getting in like at the perfect time. So as the market opens up, what we want to really be doing is trying to figure out some levels where we can get in where like our risk is really low. So I've seen this, and there are times like where you'll even preempt an ORB pattern. So an ORB pattern is when you break, the bottom of the range. So like I want to do a couple things when this happens. Like number one, as the stock gaps down, you can see, and I'm moving to a 2-minute chart because I know it's going to move really fast. It starts to pop up right off the bat at like 1325. So as soon as like this candle, see how like this candle breaks above this one and then immediately starts to reverse, what I want to do is just preempt it and take a half position like right near the highs. That way I can get a really, really good entry. So, add, a handful of shares up near the highs. And then what I want to essentially do is when I get the confirmation of the opening range breakdown, I can add more shares. So, in our chat room, like I'm trading in front of, my students during the day, I'm coming in like on the first entry at 1303, 1303. And then it was just off to the races, covered 1233. And then, I want to keep adding this. So I add more at 1225 and start covering all the way back down into the 1130s. And you want to keep adding to it as you see patterns. So essentially what's happening is I got an early entry. Now it's just a matter of, letting it ride down. So within minutes, you can see like this thing gets down into the 1225. So I want to cover some around that area. Why? If you look at the previous day, the low from the previous day was at 1225. So my initial target on this, and this is how you kind of choose targets. You never know when a stock is going to bust through a target, bust through a support resisted. But what you want to do is have some levels marked out, always like before you get into the trade, of where there might be some demand that flows into the stock. So I want to cover into this spot because I know like it can bounce. It's only a second test of this support. So it's a shot that it could bounce, and it could bounce like really nicely. So, you know, you can see here, like it goes from 12.13 and it bounces up to 12.70 in a hot second. Like it doesn't look much on the chart, but like if you're rolling, say like 5,000, 6,000 shares, a 50-cent bounce is like 3 G's to $2,500, $3,000. So you have to cover into that. So now as it gets into there, that's my second test. I want to cover in because 2 tests of support usually hold. It's the third one that gets powerful. So I cover off half. As it starts to meander around over here and it starts to curl back down, I know like we're going to hit that second test again. So now I want to double up as it breaks down these lows and come in for like the next flush. Because this is very, very important. As traders, our job is to add risk to a trade when it shows itself. You know, like we don't want to just add size to add size. I've made that mistake so many times in my career where I'm like, oh, I want to scale higher, I want to scale bigger, and that's not really a strategy. When I say add risk, it's when a secondary pattern shows up, you're going to take that and you're going to take it as an individual trade. You're going to take it as an individual trade. So it's not like you're just adding. I'm still holding some from up here, but I'm taking this as an individual trade, and I'm using this as a way to manage my risk on all shares. So I'm not just adding risk to add risk. I'm adding risk, but I'm trailing down my risk, right? I get my 9 EMA really right on top of it. So I only had like maybe a quarter risk on all shares now. So for me, that's like a worthy thing. You know, sometimes if we get, especially when we're new, if we get a little bit of profit on a trade, you know, we want to really lock it in. You know, so many of us are like that. And that, yeah, that is a smart move, like, you know, to lock in stuff. But what often happens is like when you're a new trader, you know, you get a little bit of green on a stock, you're up like 50 bucks, 100 bucks, 200 bucks, and you're just like, oh, I got to lock it in, good day. But then like the days you lose, right? Like you're just trading all day trying to get something. And so the numbers just don't work. So what you really need to do is like, yeah, if you have a little green, lock it in, but give yourself a little bit of an out. So like, for example, if you're up $1,000, you know, you could say, well, I'm going to risk $300 of that profit on this next trade to see if I can take it to 2,000 or, you know, whatever it might be. So you're giving yourself a little bit of a give back rule versus straight up stopping, because you can't just straight up stop if there's more opportunity that's low risk. Because those losing days, like it's not like most of us stop, right? You know, we usually say we have $1,000 max loss. What do we usually do? We'll go to that 1,000. Or if we have a $200 max loss, we'll go to that 200. So we have to make sure we take it on the table. So now, like, you know, I'm doubled up on this thing, and now it's just a matter of, now I know it's getting long in the tooth. So I'm just covering down all the way down here. And, you know, 11 is kind of like a sweet spot on the stock anyways. You can see here on the daily, you got a lot of support down here. So, you know, my thinking is like, as it's getting extended, I want to cover in. And then later on, like, you know, it was the same thing. Like as this thing retraced, you know, we re-hit this thing, you know, right back into the, you know, 1180s. And then, you know, I'm thinking into the VWAP, and I'm thinking, you know, maybe we can get this thing back into 11. So, you know what ends up happening? This is why like a good trade can become a great trade, because you had an entry, but like I had subsequent other entries. So it's like, okay, I'm able to take, you know, 40, 50 cents. I'm able to take a couple bucks. I'm able to take a couple bucks. So now that I'm like re-hitting and recycling, I'm able to take what was just a decent trade that, you know, like I would be happy with my day for, and turn it into something that, right, can pay you for the week, right? There are a handful of trades that can pay you for the week. And that's really important in trading. You need to have like 2 or 3 trades that are not big, like 50%, 100% winner type thing, but you need to have a few plays every week that are chunks. Like you can't scalp your way 10 cents, 10 cents on any, you know, can't scalp your way 10 cents, 10 cents, you know, long term that is part of the game. Sometimes we take those, and sometimes we're going to have some scratch trades, but we need a couple chunky plays to really make out that week. So, guys, hopefully that helps. We're going to be, chatting about some different setups next week. I'm going to have a webinar. I'll make sure to have a link for you guys. And always, let me know if you have any questions. My email is kunal@bullson.ws, or just, feel free to leave any questions. Take care.